Sir,
your mobile audio is off, sir. Please on.
विवेक, आई थिंक फाल्गुन सर अपने लैपटॉप से डिस्कनेक्ट हो गए. विवेक, आर यू देयर? फाल्गुन सर,
हाँ ठीक है, फल्गुन कुमार साहब के दोनों है, देखो रवि. अब सर गुड आफ्टरनून फल्गुन कुमार सर.
एक ही है ना सर? दोनों कहाँ हैं?
नहीं, दोनों थे, अभी दो दिखे हुए. चले गए सर.
फाल्गुन सर, फाल्गुन सर,
उनके ऑफिस में ट्राई करवा रहे शायद.
ओके.
नहीं, दोनों थे अभी. चले गए.
Hello.
Sir,
Yes,
good
sir.
evening. Good afternoon, sir.
Good afternoon, sir.
Good afternoon. I'm sorry, some technical snag. So, am I visible and audible both? Are
Yes,
there,
yes, you are visible
Both
and
are there,
audible
sir.
both.
Then let us not worry about all these PPT. I will 100% share what is the essence. Let us continue this, sir. As the members have already got delayed, I will continue, sir.
Okay. Sir, just give me a minute, sir. I'll start formally then. Good evening, everyone. It is an honor and pleasure to welcome you all for what promises to be an enthralling session of knowledge dissemination. I, CA Ravi, President of Agarwal Chartered Accountants Society, welcomes you all for this session on amendments in reporting for charitable trusts, a topic which is hot on everyone's to-do list given its importance and dynamics of its changes. There are a number of trusts which are doing great work for the cause of humanity. However, a lot of them have suffered under taxation laws due to compliance issues. We cannot deny the fact that a lot of trusts have also been used for evasion and other wrong purposes, due to which the authorities have been forced to keep a strict vigilance on the activities of all charitable trusts. In order to ensure that we as professionals can be well versed with the compliance requirements, we have amongst us an immensely knowledgeable speaker for the same, Mr. Phalgun Kumar, who has agreed to join us and share his ocean of wisdom with us all. So without further ado, on behalf of all founders, past presidents, office bearers, and members, I welcome you all for what is going to be an extremely enriching 2 hours of knowledge sharing. Thank you. Over to Vivek. Vivek, can you please introduce the society? I think Vivek is not there. Hari sir, can you introduce the society, please?
एक मिनट वेट कर लो ना, एक मिनट उनसे जब तक.
Sir, I think 100 participants हो गए हैं, इसके लिए विवेक ज्वाइन नहीं कर पा रहा है.
ऐसा.
Please go ahead, sir.
Sir, good evening, Phalgun Kumar sir.
Yes, sir. Good evening, sir.
Speaker of today's, sir, we have pleasure to see you here because we have been always getting the advices from you individually and as a group. Most of the people in our fraternity, they have been seeking advice from you. So our Agarwal Chartered Accountant Society It was established in year 2010. So we decided that you are the best person to speak on charitable trust. So we have got the opportunity and pleasure to invite you, sir. Now, this society was established just to this is restricted only to the professional discussions of the subjects related to chartered accountancy. So we have a good number of people in this. We have a few central council members, regional council members, and many other chartered accountants all over the country. All the programs are open for everybody, and today also we got more than 250 participants. So they will be getting benefit from you, sir. So with these few words, I will hand over this proceedings to our President, Sri Ravi Ladia, once again, sir.
I would now like to invite CA Madhusudan Agarwal to please introduce our speaker for the day. Madhu sir, you are muted. Madhu sir, आप muted हैं. Madhu sir, you are muted.
नहीं unmuted है मधु भाई का.
नहीं mute है.
हाँ, Madhu, start.
Phalgun sir, good evening, sir.
Good evening.
It's my pleasure to introduce legend in the charitable trust provision, sir. Dr. CA Phalgun Kumar sir is the renowned speaker on the charitable trust in all India. Listening 10 books, Phalgun sir is equal to listening 10 books or all books on the charitable society and trust. He is the encyclopedia. I think he's not only encyclopedia, he's the Google of the charitable trust in India. All chartered accountants all over India wants to listen Phalgun sir on charitable trust. He is the authority for the charitable trust. Dr. CA Phalgun Kumar sir is age about 68 years. He is a practicing chartered accountant at Tirupati, the holy place at Tirupati, since 1979 for the past 44 years. He is a managing partner of E. Phalgun Kumar and Company. He is married to Srimati Vijayalakshmi, who is a doctorate in home science and work as principal of TTD College. They are blessed with 2 children, son and daughter. Both of them are qualified chartered accountants practicing with father. Daughter-in-law is also a CA practicing in his firm only. He is Dr. Phalgun Kumar sir is a classical flute player also. His education are MA, MCom, MBA, BL, DISA and PhD. He is a member of Institute of Company Secretaries of India also. He is a qualified independent director of ACAS of MCA Government of India. He is member of AP State Regional Direct Taxes Advisory Committee for 2023-24 and 24-25 for years. He was appointed as a member of Board of Studies of SV University and also SP Mahila University for the period 2012 to 2014 period. He presented more than 450 technical papers in income tax in the past in various CP seminar in all our 4 southern states, all CA branches. On GST, he has delivered more than 50 lectures across southern India. Most of these lectures are viewed in YouTube. It is our pleasure that you have given so many on GST also. We know you more on charitable trust and GST also now. He got his doctorate, PhD in accounting and auditing standards for non-profit organizations. He is PhD and doctorate in non-profit organizations from Sri Venkateswara University, Tirupati. He is serving the society as trustee and executive member of several charitable institutions at Tirupati. He has been appointed as finance committee member for 3 years, 2020 to 23 of IIT Allahabad UP. He was a member of SIRC from 2010 to 2019 and chairman of SIRC 2016 and 17. Sir, we welcome you to our seminar. It's our pleasure that you are giving your valuable time here. I present Dr. CA Phalgun Kumar, sir.
Thank you, Ji. Thank you, sir. Sir, am I audible and visible, sir? Both?
Yes, sir.
Thank you. So shall I continue, sir? Hello? Hello?
Yes, sir. You may please start, sir.
Shall I continue, sir?
Yes,
Yes,
sir,
yes,
please.
please start, sir.
I will please allow me to share the screen also. Sharing the screen, host has to enable me. Host has to enable me. Sharing the screen also, please.
1 minute, sir.
Sir,
Sir, I think
please
you'll
try
be-
sharing now, sir.
I think you'll be able to share now, sir.
Yes, sir. Yes, sir. One minute. My PPT has come, sir, on the screen.
No, sir.
Then in the Zoom meeting, somebody you should share. Now, sir.
Yes, sir.
Sir,
Yes,
it's,
come, sir.
we
Very
are
good.
doing, sir, now.
Somehow God has permitted. Sir, now.
But you are handling the cases of God also, so God will definitely help you.
Okay, sir. Okay, sir. Shall I continue,
Yes,
sir?
Welcome, sir.
Yes, sir. Please, sir. Good evening to all of you. Om Namo Venkatesaya. Good evening to all of you. So now, the today topic given to me is on charitable trusts, especially the new audit report prescribed. The new audit report that is prescribed for these charitable and religious organizations. So earlier we were having, whenever a charitable institution or religious institution filing ITR 7, we used to two types of audit reports, 10B and 10BB, we used to upload online. So this the 10B was prescribed for 12A registered institutions, that is who claim the exemption under section 11. 10B was there and 10BB was there for 1023C. Now that old distinction has been removed, a new distinction and new forms have been prescribed for 23-24 assessment year. So these new forms have come recently, just 2 months back. So what is these new forms? Actually, when we conduct the audit to claim the exemption under section 11, those who have registered now under 12AB, section 12AB, those who have registered for 22-23 assessment year under 12AB. Now for 23-24 also, we have to continue that exemption. To continue the exemption only, this audit report is made mandatory. So the new audit report prescribed is having 49 clauses. To whom, first of all, this audit report is applicable, we'll start with those who are enjoying either 1023C or section 12AB registration and the exemption when they want to claim by filing the ITR 7. Now the new distinction between these two audit reports is 5 crores and above gross receipts holding or having institutions, 5 crores and above gross receipts holding charitable institutions, they have to file Form 10B. And similarly, those who have got a Foreign Contribution Regulation Act receipts, they do have to choose this Form 10B. So this another third condition to whom this 10B is prescribed is those who are applying their income outside India. Those who are applying there. That means the 3 conditions, if you satisfy any one of these 3 conditions, if you satisfy, you have to file Form 10B, the new audit report having 49 clauses. So this new new Form 10B, the audit report is applicable to those institutions which are having 5 crores and above gross receipts, whether it is a religious institution or a charitable institution, whether it is 1023C, 4, 5, 6, 6A approved institutions or 12AB registered institutions. For them, this 10B is prescribed. And for all others who want to claim exemption, having 12AB or say 1023C, for them 10BB is prescribed. The main difference between these 2 audit reports is 10B is having 49 clauses. Out of that, 32 clauses are only made applicable for 10BB. So the clauses are one and the same, but 10B is for a bigger institutions. The distinction as I have already given. 10BB is for other than the bigger institutions, smaller institutions. So first of all, anyone who tries to understand the audit or say the exemption of these charitable institutions with the due audit report must understand the basic concepts in the Income Tax Act. This section 1023C or 11, 12, 13 sections are by code by itself. So unlike the business institutions where generally we prepare P&L account, the fundamentals of accountancy right from the first day, we try to learn to prepare a P&L account or income and expenditure account where all the nominal accounts are closed after maintaining the day-to-day entry by entry, the accounts from the ledger drawing the trial balance. We close all the nominal accounts to P&L account, and then the real accounts and personal accounts we take to the balance sheet. Here also, for these charitable institutions, the audit report is prescribed, income and expenditure balance sheet one and the same, but the arriving the computation of income. For a business entity, you start with the net profit, make add less, then you will get the business taxable income. Whereas here, it is entirely different. Here it is entirely different. So in the sense, the receipts and payment account of the total institution we have to prepare here. And here is not, focus is not on the net real income. Here is on the gross income. And if you apply 85% to the objects, the 85% is exempt. Automatically, the remaining 15% or less is also exempt. That means if you apply 90%, the remaining 10% is exempt. So the minimum application is the focus here. Because for the public cause, either for religious, public religious institution or charity. Whereas in the case of a business institution, on the net profit only, the focus is there. That is the first difference. Similarly, here in the case of trust, not only the revenue expenditure, the capital expenditure is also allowed without any distinction, all the capital expenditure. Whereas in a business entity, capital expenditure is not directly allowed, only depreciation, eligible assets, depreciation, eligible assets, depreciation only is allowable. Whereas here, the application is both revenue expenditure and capital expenditure. Similarly, in the case of trust, some of the gross income, some items or components of gross income are directly taxed. For example, the anonymous donations, section 115 BC, is directly taxable without allowing any expenditure. Similarly, whether capital expenditure or revenue. Similarly, some items, section 115 BBI, the newly inserted section, specified incomes, some specified incomes are there. like the benefits passed on to the substantially interested persons in these trust cases, they are all directly taxable 30% without allowing any expenditure. Similarly, sale of assets, fixed assets. So you compute the capital gains in the capital gains chapter, whereas in the normal cases, whereas in the case of trust, the code is directly not allowing you to compute the capital gains, no indexation, whether it's long term or short term. There is another method of computing the income and then making it taxable if conditions specified for exemption are not satisfied. Similarly, in the case of a business entity, the loss carry forward is allowed, normally 8 years. Whereas in the case of a trust, no question of excess expenditure, whether revenue capital expenditure is being allowed, no carry forward benefit is given. In fact, the benefit is given only for the trust to carry forward the income. The income, instead of you subjecting it to tax, excess income, you can carry forward that excess income subject to certain conditions for 5 years. So, or by filing Form 9A for 1 year generally, and by filing Form 10 for 5 years, you can carry forward the income in the case of trust, whereas in the case of a business, loss only is being carried forward. The distinction I am making so that the focus, the fundamentals itself, one should clearly understand. These are all the things that are going to be filled up in the audit report, that are going to be filled up in the ITR 7, then alone you will get the exemption. So the exemption is subject to so many conditions. The computation itself is going to be certified by the auditor first time from the 23-24 assessment year. All these years, either the 10B audit report or 10BB old audit reports were asking some of the components of income only. Just like tax audit report, in the tax audit report, you are not computing the net total income that is taxable. You are only giving, as per the clauses in the tax audit report, the facts being represented. Only in few places opinion is being given in the tax audit report. You are not ultimately arriving any business taxable income in the tax audit report. Whereas from 23-24 onwards, in this new audit report Form 10B or 10BB, the auditor has to certify, has to express the true and correct, the true and fair income tax balance sheet you have to give. In addition to it, the annexure to this 10B is nothing but the 49 clauses. In that, especially the clause 31 in this Form 10B, out of the 49 clauses, the clause 31, you are arriving the taxable income. What is the taxable income? So for a trust, as I am now explaining, the taxable income is from different angles. From gross income itself, some of the components are becoming the taxable income if the conditions prescribed are not being satisfied. Similarly, the other net total income also, that is 85% shortage, what is not able to be applied. For that also, the taxable income, you are going to all such types of, normally 6 types of taxable income, 1 + 2 + 3 + 4 + 5 + 6 types of taxable income one can have in the case of a charitable institution. That taxable income has to be arrived in the audit report. The same thing when you are filing the ITR 7 also, you have to. So the computer will compare this audit report with the ITR 7 and then will arrive the final tax liability. So the auditor who is auditing these charitable institutions has to arrive this taxable income. This is the peculiarity. Similarly, in the case of business, as per section 145, you can have either a cash system of accounting or mercantile system of accounting. Here for charitable institutions or religious cum charitable institutions, there is no prescribed method of accounting that is to be followed, but only for allowing this expenditure, whether it is revenue expenditure or capital expenditure, only cash system of accounting has to be followed. That is, the actual expenses incurred only are going to be allowed, not the accrued expenses. So in business also, there is a particular section 43B. The 43B for 6 types of expenditure only, cash system, and that too either during the previous year or before the due date of filing of the return. If expenditure is incurred, then it is allowable expenditure under the head business. Whereas in the case of these public, religious and charitable institutions, the total year expenditure only during the previous year, you have to incur on cash system, on mercantile system, and nothing is available. So similarly, one more peculiar, the last peculiar to my knowledge is, in the case of business, capital receipts are not income and capital repayments are not expenditure. In the case of trust, especially the loans, if you have a bank borrowal or the promoters themselves lend the money, in addition to their corpus fund donation initially to promote the trust, most of the promoters lend their money either temporarily or for a long time. So the loan repayment is also an allowable application. So in the case of trust, the loan repayment, but subject to within 5 years only from the date of receipt. That's why the loan repayment here only for the trust, though it is a capital repayment, in the trust case, capital repayment is also taken at par with the capital expenditure incurred during the year. In the year of repayment only, it is taken. So it's subject to that. The loan source is income. Out of, say, in the first year, you borrowed 50 crores and then constructed a medical college. Then in the fourth year or fifth year, out of the educational income or say out of the hospital medical relief income, you are repaying the bank borrowal. So in the fifth year, when the loan is repaid, then that is treated as the capital expenditure incurred in that year, deemed expenditure, and this. So this is how the peculiarity of the trust is there, which one should distinguish. So to allow this loan, all these years, simply in the ITR 7, somebody is claiming, some assessing officers try to understand this and then allow it. Some assessing officers, without understanding this code, disallowing number of court decisions left side, right side. So then now this audit report, now the prescribed books of accounts. For loans also, there should be a permanent register. In which year the loan is taken, for what purpose it is utilized, in which year the loan, such a loan is repaid. So the prescribed books of accounts in August 2022 for this charitable trust, a 5 pages Rule 17AA is prescribed books of accounts. In the tax audit report also, books of accounts maintain cash book, ledger, journal, bank book, maybe stock register, but they are not the exhaustive books of accounts anywhere else prescribed. Whereas in the case of charitable trust, now after so many years, in August 2022, prescribed books of accounts are given in Rule 17AA. It is an exhaustive books of accounts. List is given. For such books of accounts, in the audit report, the 10B, notes on audit report gave the code numbers for such books of accounts, such code numbers 1, 2, 3, 4, the code numbers for prescribed books, whether they are maintained, whether they are available, whether they are examined in framing this audit report is the question, is a clause in this audit report. So this many prescribed books of accounts have been kept and maintained by the institution, where they are maintained also. You may have several institutions. For each institution's name, address you have to give. So where they are maintained, whether maintained electronically or not. And another peculiarity of this audit report is, in many of the clauses, the expenditure incurred, is it through electronic mode or bank mode, or is it through cash? You have to give in this audit report. You are giving the expenditure amount ascertained object-wise. If you have 4 objects, education, medical relief, relief to poor, object-wise expenditure you have to give, and also the such expenditure is incurred through cash, how much during the year, through bank, that's the bank is equal to electronic mode. 6 types of electronic modes are there. So it is also prescribed in the audit report and the notes on the audit report. Those code numbers you have to give. So this is the bifurcation and giving is a complex job. To fill up this audit report, minimum 4 days will take to me. And earlier 10B or 10BB, hardly 5 to 10 minutes job. Now it will be a 4 days job. So I am now insisting the members who are going to certify to be more careful in complying this audit report. Before complying this audit report, computing and then certifying this audit report, the true and correctness, though it is the primary duty of the auditee, but the auditor has to ascertain and subject to his comments only, the audit report has to be uploaded. So the prescribed books of accounts and documents. So the word is not ending with prescribed books of accounts to be kept and maintained. Other documents, they have given the other documents also, a list they have given. So the prescribed books and other documents, if you don't maintain, or simply you said and the assessing officer would have found you have not maintained, or yourself said that they have not maintained, then if you have not maintained these prescribed books of accounts, then no question of allowing section 11 and 12 exemption. So no question of your capital receipts being exempt under section 11(1)(a). Capital receipts in the sense sale of assets 11(1)(a). 11(1)(d), the capital receipts exemption is there. So for corpus fund donations, that will not be there. Even the excess income for accumulation of 5 years is not allowed if the books of accounts are not maintained. So the importance of books of accounts to be maintained and the auditor to specify such books of accounts and other documents. Why I am saying the other documents, they prescribed the record of fixed assets, record of immovable property, record of movable property, record of donors, record of income applied. To whom you have applied this? That person's name and ID also you have to. This is prescribed. This is a very practically difficult. For example, you are doing poor feeding. If you are doing poor feeding means the persons will eat the food. Whether it is the person's ID, Aadhaar card or PAN card you have to maintain, or the expenditure incurred only, that means you purchase the provisions. So the provisions and the cook and the salaries, their ID only you have to maintain. Maybe the both, or only if you maintain at least one, the expenditure, because through bank or cash, what you are incurring, that genuineness, if you want to prove, only this is necessary. Maybe now and then the dining hall photos also you keep, then both you are satisfied. The record of the expenditure incurred with the person's ID you have to maintain is prescribed in 17AA rule 1 small d. So this is the importance of maintenance of books of accounts, which has to be verified, certified, and in detail to be given in the audit report. So the audit report is the end product, wherein the taxable income of the charitable institution, after availing these exemptions, satisfying several conditions you are going to satisfy. So before that, the conditions for these exemptions, right from the registration, let us see quickly in the given time. So as I told you, the rule 17AA1, the small a, rule 17AA, small 1, small a, says cash book, ledger, journal, copies of receipts issued. If you receive the donations, what sort of receipts you have issued, computerized or manual? Then serial numbers. Then for all the expenditure vouchers, bills, have you maintained? Similarly, if there is an incidental business for the charitable objective, for example, a hospital, medical shop, pharmacy is incidental. For a school, running a hostel is incidental. Or for a school, selling books of accounts is books, like school books selling, maybe incidental. Running buses may be incidental. So if at all it is resulting into profit, it amounts to business carried on, which is incidental to attain the main objective. Separate set of books of accounts you have to maintain, whether separate set of books of accounts are maintained or not. Prescribed there, whether you are maintained or not, you have to mention in your audit report. Similarly, the other than the incidental business, if at all there is a business, that you have to again also maintain. So the other documents, they are given list of institutions, the donors details, the donations are in cash or in kind donations details you have to maintain, the income applied persons, and then the mode of investment, deposit or investment, is it as per section 11(5) prescribed mode you have to maintain in a separate register. The income accumulated, if at all you are filing form 9A or form 10, what is the brought forward accumulated amount? what is the current year accumulated amount, and what is the carry forward amount you have to maintain in the prescribed mode. The several columns are there in the audit report. As per those columns, you have to maintain those records. So the corpus fund donations, who has given, for which purpose, specific purpose they has given, how it is being invested, you have to give. Because in the year of corpus fund receipt, if you are not going to utilize it for the specific purpose, you should keep that in the 11.5 mode, and then within 5 years, if you again bring back that money, that means for other than, if you are not able to accumulate it as per section 11.5 in the year of receipt, within 5 years, if you bring back to 11.5 mode, in the year you bring back, also it is allowed as expenditure. So for that tracking, they want you to maintain a record, a register. So the loans and borrowings also, as I have already explained you, a record shall be maintained. For properties also, you have to maintain, including the transfer details of those property. Similarly, the specified person's record you have to maintain, and the transactions with them also must be there in this records. So any other document for company. So now coming to the accounts and audit, we are all experts in the accounts. So the normal accounting principles will apply for computing the income. There is a true unfairness. For example, the most controversial depreciation on which a number of court decisions, when you are allowing the capital expenditure, is not a double deduction when you claim the depreciation. So on that, the section 11 subsection 6 has given the clarity. So where the capital expenditure is not claimed as application in the earlier year, on that the depreciation is allowable application in the current year. When you once claim the capital expenditure, it is though for true unfairness every year on your fixed assets, you calculate the depreciation charge to income expenditure account. The depreciation will become two components. On those assets where original cost is claimed, one type, on which the depreciation is not allowable in computing, whereas those assets costs which you could not claim, as I gave you the example in the case of a medical college, say you with 50 crores bank loan, you have constructed the buildings and then acquired the equipment, so medical equipment. So there, because it is not out of the income, you cannot claim, you could not claim the fixed assets cost. So the such fixed assets cost in all the subsequent years, eligible depreciation as per normal life and the value that is being eroded year after year, taking the ultimate residual value of the fixed assets at the end of its life. So the depreciation eligible has to be certified by the auditor in this form 10B. So unless you maintain such records, you cannot exactly certify it. So the format of financial statements for non-corporate entities, the institute has given a format. So for consistency's sake, that institute given format we have to maintain from 2022-23 assessment year itself, it has come. So now for 23-24 also in that format, subject to those normal accounting principles, the accounts are to be maintained, and then financial statements are to be prepared. And all the financial statements must be accompanied by the accounting policies that are being pursued. Disclosure of accounting policies also necessary. Similarly, whatever we are following, that should be a consistent method. In that way only we have to follow. Then the question comes, the registration. What are the conditions for this section 11 exemption? Similarly, whatever the conditions were there for this section 11 exemption, almost 95%, 96% are the similar conditions now under 1023C. There is no substantial difference between 1023C and 12UB. 95 to 96% okay. Only 2-3 differences are there, which are very, very minor. For our today discussion, we need not touch that topic. So conditions for claiming section 11 exemption, I have briefly given as 10 points in this PPT. So these 10 points are most essential besides several other conditions. So I will go through one by one. For example, the registration 12A. This section has come from 22-23 assessment year. Many people who were enjoying section 12AA registration up to 21-22 assessment year, who failed to get that, now just 3 days back on 24th May 2023, this month, 3 days back, those who failed, those who could not avail the opportunity because the date expired by, after 4 extensions, 25th November 2022, the new registration, 5 years eligible registration, because earlier unconditional perennial registration has been changed to once in 5 years you have to renew in line or at par with FCRA registration. So the new registration who could not get a last opportunity, one-time opportunity is once again given 3 days back by the CBTD circle number 6 dated 24/5/2023. In this, Form 10A has to be filed. Many people filed Form 10A because it's a Form 10A with 12 code numbers. Wrongly quoting the code number also, they could not get correct renewal, where they have to get 5 years renewal. By giving a wrong code, they got only 3 years provisional. And after that, they have forgotten. The provisional also they have forgotten. For all of them, once you get a provisional, you have to file Form 10AB. So for all of them, now this circular has given for 5 types of reliefs, receiving so many complaints or say difficulties. The CBTD is kind enough to give this circular 3 days back. So as per this, those who could not get for 22-23 assessment year, even now they can file this and then avail this, either 12A renewal or ATG renewal. Form 10A is one and the same, either for 12A or ATG. For fresh registration of also same Form 10A. That's why 12 codes are given. One should go through those code numbers, understand this, and then claim these things. So the similarly, Form 10AB also, the date extended is 39/2000. That means 4 more months is there. So my advice to all the assessees is through our professional policy is whether you already got renewal, provisional or regular, is it proper or not? Once again, you check up. Why I say, if the application given in 2021 or 22 is wrong, now a chance is there for you to correct. You apply afresh and cancel the wrong one also. Why I say, in this Form 10A and 10AB, your objects you have to give correctly with a code. Now in the 23-24 new audit report also, what are your objects? You have to give with the code number. As per the code number objectives only, what is the expenditure incurred? You have to give. Some people, dominant object education only you would have given. Along with education, you would have got some relief to poor, some social service activities, objects. If you have not given it, by incurring such expenditure, you will lose your registration and you will lose your Section 1112 exemption. So to correct those mistakes also, this is the opportunity. So those who want to, so for some people, because of delay, even if the commissioner has refused it, the board circular has given elaborated 6 pages are there in the circular. Please go through this circular. In this, they are given even the rejected one, you can keep aside on the online and say, can get it cancelled. Fresh, you can make the application either 10A for a renewal of 5 years or provisional of 3 years, 10AB, those who got already provisional 3 years, to get it regularized for 5 years, you have to you have been given the time September 30th, 2023. Similarly, 10BD is a annual return for the donations received. So the 10BD last year, first time for 22-23, May 31st was the due date. Some could not fill up properly. The CA Institute last year itself has brought out a book on this donations received. There is mainly how to upload this Form 10BD with step 1, step 2 process. Also, Institute has brought down a book so that you can download even now. So the 10BD this time for 23, because of these registrations, all these things, they have extended up to June 30th. Now we are in May. We are now May 27. But this says up to June 30th, instead of the prescribed 31st May, 1 more month extension is given 10BD. So similarly, for some people, the Act is having some dichotomy. In Section 12A1, small AC, Section 12A1, small AC, last 6th limb, small 6 said, 1 month prior to the previous year, in which you want, for which you want the exemption under section 11 or 1020. 1 month prior to the previous year, not the assessment year, you should apply. Then only for the relevant previous year, relevant assessment year will give the exemption, registration exemption. So that 12A1 AC is in conflict with the general 12 capital A 1 main section, which says from the previous year in which you have applied for registration, this registration is effective. So the board has clarified now through this circular survey, in the previous year, whenever you apply, in the previous, this is the old section. So now being reinforced and restated through the circular. So during the previous year, you know that you are going to have some taxable income. Then once you apply, then automatically you will get the registration for that previous year. Now board has clarified. So the Form 9A and Form 10, the 85% whenever you are not able to apply during the previous year on the cash system. So the option is given in the coming 5 years, such income you can apply for your objects. So the income carry forward forms, either 9A or Form 10, 2 modes are there. So in case of Form 10 conditions, 3 conditions you have to satisfy. Whereas in the case of 9A, only 1 condition, the form filing only is the 1 condition. So for these, actually the 2 months time was prior to the due date of filing of the return. You must file these forms, it was prescribed. So now the circular says, instead of the 2 months, on or before the due date of filing of the return, you file this accumulation also, because you will know the quantum of accumulation. Shortfall of application only when the books are audited and the auditor scrutinizing only, they will be available. In the audit report also they has to be mentioned. So they said now on or before the due date, not necessarily 2 months before the due date. This is the board circular, which is very, very important both for registration and for accumulation. Similarly, during the previous year, if you modify the objects or if you adopt the objects other than those originally, when at the time of registration, what you got, then within 30 days during the previous year itself, for example, a pure educational institution, if it donates some money to the Chief Minister Relief Fund, Chief Minister Relief Fund is relief to poor only because he is going to apply for the public relief. So then it is not as per your objects, because the Supreme Court decision in the new Noble Educational Society from Hyderabad only, it has gone to Supreme Court, and throughout the country it has shaken. So this decision of the Supreme Court on October 19th, 2022, the purpose of charitable purpose definition 215 has been thoroughly examined, and similarly the education purpose solely existing for education also has been thoroughly examined. So education means only education, no question of any other activity. If you have other activity, that other activity is other source income. No question of this code, this exemption will be there. That other activity, other income is directly taxable. The Supreme Court has given interpretation of the law. All the GS, other activities also, once you have only other income also is being claimed under sectional exemption. Now it is not there. So the objects clause is just like a Bible, one has to thoroughly go through the objects every year, and every year towards which object, how much is incurred, thoroughly to be examined and then certified. Similarly, the audit report submission is within the due date. Actually, the audit report has to be submitted 1 month before the due date of the filing of the return. So that audit report submission online is also there. And then for the filing of the return also, the due date is prescribed. The due date prescribed can be 139.1 due date is prescribed, but the 139.4 due date also, that is up to 30th December also, you can file the return of income. So then also you can claim the exemptions. So the 85% application during the previous year, whether it is satisfied or not, the auditor has to examine. And similarly, for the accumulation, already I told you Form 9 and 10 has to be filled up. This Form 10 also last year is amended. Earlier Form 10 is different. This year Form 10 is different. This Form 10, now earlier only current year income, how much you are accumulating, you have to pass a resolution and then file Form 10. Now for every Form 10 of every year, what was the earlier year's Form 10 accumulated money, for which year, how many forms, earlier forms you have filed Form 10, and what is the available amount, and what is the amount applied, and what is the carry forward amount. Those things we have to take. So similarly, for investments, a register has to be maintained. The deposit, the property and the money funds of the institution, trust or institution, has to be in the prescribed modes of section 11.5. So the prescribed modes of section 11.5 investments has to be maintained in the register. So whether they have complied or not. For example, unknowingly, if the money, say, I used to give, because number of decisions are there, say somebody donates the shares, for example, a rich person seeing the good work being done, or say the temple, for a temple, he says, after my death, my ITC limited shares shall be passed on to this trust. ITC is a quoted share. It is not in the section 11.5 mode. So only on the death, because of his will, those shares will become the trust will become the owner. So the time limit is given for section 11.5. During the previous year, if you get, you are not acquired, but you got it. So then within 1 year from the end of the previous year, you must convert those other than 11.5 mode into the 11.5 mode. So all these things are to be reported in the audit report. Registers are to be maintained. So like that, some people voluntarily, for example, an education institution, in the month of June, July, if they collect too much admission fees, they go for private chits. So not private chits in sense of chits, maybe Margadarshi chit, maybe Sriram chits. So there they will get the return for their savings higher than the normal bank deposit interest. So this chit is not a approved section 11.5. Number of case laws, whether it is it the word deposit, is it the word investment. So few decisions are in favor of this, few decisions are against the SSC. So without inviting controversy, the auditor has to advise them not to go for other than the prescribed mode of section 11.5 investments. Similarly, the sale of capital asset has to be examined. So if at all an asset is sold or transferred, for example, mutual funds, some mutual funds are prescribed, allowed under section 11.5. Those mutual funds sale or transfer is also covered by section 11.1a. So you can claim the exemption with the specific condition that the sale proceeds have to be reinvested either in a new capital asset or at least in a bank FD of a minimum 6 months period. So then you can do it. So similarly, there are 11 examples in section 13.2 where when the transactions are with interested persons, the benefit should be for the trust, not to the person, trustee, or the specified persons. So the examples are given in section 13.2. All these things are given in the audit report, now newly prescribed audit report also. Are there such transactions? Is the benefit to the trust or to the person? So this is an opinion rather than a fact, but the auditor must carefully give his opinion through this audit report. As I mentioned earlier, in the report also, some transactions is not a fact, but an opinion, reasonableness. So here also the reasonableness has to be judged by the auditor based on the facts, and the audit report has to be given. So these are all the important things just I have prescribed. The true and fairness of the financial statements, and then the ICA technical guide as I have given you earlier, and then the accounting principles, cash and mercantile system, and then accounting standards you have to follow, because the assessing officer may question you on what basis you are claiming this, because you purchased, for example, you have purchased a vehicle, an ambulance for a hospital, a charitable hospital has purchased a vehicle. the vehicle purchase is on hire purchase basis. They prescribe the EMI. Each EMI is having some interest component. So the interest component on accrual basis you are claiming, or on cash basis you are claiming. Only on cash basis the interest is allowed as application. So the principal also here is allowed because you borrowed with borrowed money, you purchase this. So what is the interest component? Two methods are there to arrive the interest, either on the reducing balance method or on the equal component method. So the methods based on which, the principles based on which you are arriving the true and fairness, one should have the clarity, and then alone you can correctly certify these things, so that the auditor's liability is also can be minimized, restricted only when he consciously applies all these principles. Otherwise, say auditor's liability, because ultimately whether the Section 11 exemption is given or say it is being forfeited is up to the department. But having done a good work, if these principles are not followed, the auditor, because of this new audit report, inviting a more liability. That's what I would like to drive home the point. Then as I have given you, 10B, the now new 10B prescribed is applicable. 5 crores gross receipts income. Actually, here itself, this 5 crores gross receipts in some other context also is prescribed in the chapter. For example, without any registration, without any approval, if it is solely existing for education, just like your every street corner school, elementary school, or say high school, or say even a degree college, if its gross receipts are less than 5 crores without any registration, for them 10B audit report is not prescribed. 10B is only for registered institutions, whereas unregistered, unapproved, purely solely existing for education and solely existing for medical relief, for such institutions also, because they are doing public service. The earlier 2 years, till 2 years back, till 2021, the limit was 1 crore, that has been raised to 5 crores. So there also this word 5 crores is there. For them, without these things, you can find. Similarly, who have FCRA receipts, please understand the word receipt. Mere FCRA registration during the previous year, if you are not having any foreign funds inward, this 10B is not, 10BB is applicable. If you have receipts during the previous year only, the 10B is applicable. Mere registration is not criteria. So the difference between these two is I am distinguishing. So if you apply income outside, what is Section 11, subsection 1, small c says, if at all you are permitted by the CVTD, by the government, if you apply that I have to do some charity work outside India also, with the prior permission of this government only, you can do that. Or if it is before 1961 institution, then also as per its old objects, it could apply. So if you are applying outside India, then the 10B audit report will apply, where 49 clauses are there. Otherwise, say only 32 clauses, 10BB, but main clauses are one and the same for both these institutions. Then I am coming to the practicality, the practical thing. As I told you, the income and expenditure balance sheet, which you have to certify in these audit reports also, is the format sake only. But for computation sake, the receipts and payment account alone will help you, and receipts and payment account also in a particular mode you have to prepare. What is that particular mode you have to prepare? Receipts and payment account, as we know, is only vertical. I am now advising you that vertical one, once again you bifurcate into top first half horizontally revenue receipts, revenue payments, bottom half capital receipts, capital payments. Why I am prescribing? Because the whole computation, the whole code of this section 11, 12, 13 is based on the revenue receipts normally will form part of the income. Capital receipts also sometimes is part of income. So these two income side receipts, revenue receipts and the capital receipts also. Similarly, payments, revenue payments are allowable 85%
expenditure, and then capital payments are also allowable expenditure. So from the source is linked to the payment. The concept of this code is which income source for which payment you have met is more important. A person may have 2 shirt pockets, 2 pant pockets. So from which pocket money you are incurring which expenditure, you have to identify. So that is the more important thing. That's why whether the revenue receipts you have applied both for revenue expenditure and capital expenditure, yes, 85% allowed. The capital receipts, if you apply for revenue expenditure, normally your bank accounts need not be watertight compartments. But for capital receipts like corpus fund donations, you should have a separate bank account. I advise you. In the next slides, which I am going to show you, the words used for section 11(1) subclass D is maintained separately. The word used for claiming corpus fund donation exemption, the word used is in the Act section 11(1) small d, the 2 years back amendment. Such a corpus fund donations are maintained separate. What do you mean by maintained separately? So if in the same bank account, you cannot say you have maintained separately. My advice is if you can keep a separate bank account for all the cards, that means donations receiving, your normal donations, cut one receipt book. So keep a separate receipt book. That money you keep in your normal bank account. Whereas for corpus fund donations, when the donor itself is choosing to give as not normal donation, specific donation, that money is from the receipt stage itself you keep in separate bank account. Either you use it for the purpose for which it is given, or you keep it in the section 11(5) mode investments. Then alone that is exempt. Otherwise, it is taxable. If you are not able to do that, your day-to-day expenditure is very much needed, then you use these corpus fund donations in the current year. But within 5 years, whenever you get on a later date a surplus money, income, that money, if you are going to keep in 11(5) mode, you say, I am now replenishing that corpus fund of 3 years back, 4 years back, shortfall. Now I am making good. So the 22-23 return on ITR 7, when you are filing, you would have found a peculiar logic in the ITR 7 that what is your corpus fund balance? How, with which assets it is being represented? The concept is now only introduced. Whereas for all these earlier years, the corpus fund also would have been used for revenue expenditure. There is no matching that corpus fund is equal to assets, fixed assets or mobile assets represented was not there. But the ITR has that logic. So now you have to continue that. So preparing the receipts and payment, you may have different heads, different ledger accounts in the trial balance, but you must prepare, one must prepare a receipts and payment account like this. Then only the source you are going to match. Sometimes revenue receipts are more, so the revenue payments are less. So the remaining thing will go for 11(5) mode. So the 11(5) mode may be 3 types, because surplus income where you are going to file form 10, one of the conditions of form 10 to claim exemption is keep it in 11(5) mode only for a specific purpose. You accumulate the money and then use it. For example, a hospital, it wants to buy an MRI or CT scan machine, which is 3 crores, 4 crores. With 1 year income, 2 years income, you may not be able to buy that machine, which is a costly machine. You file form 10 and accumulate that crore, but that money, you should not touch it. Keep it in a separate bank account and specific purpose only you should withdraw and use it. What is that purpose? What is when you have withdrawn, when you have used? So the 11(5) mode, you have applied 85%, 90%, 10% money also you should keep in 11(5) mode. When you are not able to apply 85%, shortfall is there 8%, 9%, that also you should keep in 11(5) mode. You sold the capital asset to claim the exemption from the capital gain. The condition is keep the money in the bank FD. That's also 11(5) mode. So 11(5) mode may be different types of different pockets from which is the source for making that 11(5) mode. One should be very careful. So by preparing the receipts and payment account only, for each payment the source is linked, then only the exemption can be claimed. So to claim the exemption, because in the audit report, in the ITR 7, the auditor is certifying in the audit report, the assessee, the donee is, sorry, the auditee, is filing the ITR 7. Though practically the auditor is filing the ITR 7, the law expects the assessee to file the ITR 7, preceded by the audit report being uploaded and accepted by the auditee. So this receipts and payment account is most essential. So one has to keep this receipts and payment account. Then only the preparation can be go properly. That's what I advise you. So the cash basis, receipts and payment account and cash basis. Again, I want to bifurcate in the sense because for any incidental business, you are having charitable purpose 7 classes. In the 7 classes, first class, relief to poor, medical relief, education, yoga, preservation of environment. Last class is objects of general public utility, GPU, objects of any other object of general public utility. So the word business is used 2 places in this 11, 12, 30. Section 11.4 and section 11.4 capital A, the word business is used. For other than the GPU, in the definition of charitable purpose, last class, general public utility class. So the last class business is different, and for all other objects, relief to poor, for example, 10 widows in a town joined together as a society and they make papad, they stitch the eating leaves. So they sell it. Some small items, some appadam, papad, they make and then they sell. So the relief to poor, though it is a commercial activity, buying, selling, the object is only relief, poor people joined together and carried on a business. It is not hit by this proviso to section 215 charitable purpose. So the 215 charitable purpose provisos are applicable only for the 7th class general public utility. Or to bring the difference more clearly to the members who are listening, a charitable institution can carry on a business if it is other than general public utility objective, that is education. A hostel can be every year giving some surplus. The hostel surplus is being subsidized to education. Or a engineering college is running buses. Outside source buses are taken on hire, and from the students they are charging every year some 10% surplus. Then anything with profit motive is a business. Such activity, if it is incidental to main activity only, such income is exempt. So for other than general public utility 7th class, for the 6 classes, whatever you do to attain your main objective, as I gave you, a medical relief, a hospital runs a pharmacy. So pharmacy is business. You cannot sell less than the cost. Some 2%, 1%, 5% margin you have to keep. So then it is a business. For incidental business, it should be an incidental business, and separate set of books of accounts are maintained, and such income is being used for the main objective, then it is exempt. But separate set of books of accounts means for the business receipts, open a separate bank account, keep the books of accounts maintained, just like your tax audit report. For these business receipts, business expenditure also, tax audit report has to be maintained. In addition to the normal charitable institutions audit report, tax audit report also has to be filed. So if at all any disallowance are there in the tax audit report, directly tax has to be computed, paid. So similarly, administrative expenditure. In FCRA, administrative expenditure to a certain limit only. So here also the administrative expenses you have to mention in the ITR 7. ITR 7 is asking what is the total expenditure applied. Bifurcate it into main objects, administrative expenses. So you have to. So while maintaining the ledgers, while booking the expenditure itself, you should bifurcate this, and finally at the end of the year, draw. Similarly, the donations received, donations paid. From the public, you may receive a normal donation. In the case of a religious institution only, anonymous donation is exempt. Section 115 BBC is not applicable. Whereas in the case of other than religious institutions, unless you maintain a register record and identify them in this research payment account as identified donations, then alone those donations are not directly taxable. Subject to the 85% being applied, they are exempt. So when you give the donations also, three possibilities are there to somebody you are donating. A, from the current year income, you have given to other institution as a revenue expenditure, the donation. Here the first condition is your object and their object, your 12A registration, and they too should have 12AB or say 1020A approval. So unless they have it, similar objects for similar purpose, your donation to other institution to meet its revenue expenditure is not allowable in your hands. The second condition is from this 23-24 assessment year, they said even then 85% only is allowable, not the 100%. The amendment has come. The other thing is, if you go to your other institution, from the current year income to the other institution's corpus fund, then it is not an application. So when computing your income, you have to pay the tax because they are also taking it as corpus fund donations. So from your normal income, normal donations or normal income to the other institution's corpus fund, if you donate, then it is not allowable in your hands, the donor's hands, donor's hands as an allowable expenditure. So if you give to revenue income only, then 85% at least allowed. If you give to the other institution's corpus fund, then not even 1 rupee is allowed. And similarly, there is another possibility. Not from the current year receipts, for earlier years 10%, 5%, up to 15% every year you accumulate. Out of those donations, out of these accumulated funds, if you donate, you must identify them and then say, out of those accumulated funds, I have donated because simply I am keeping in bank FD. Let the other institution start a new educational institution. So for education purposes, you donated. Then the question of allowability in the computation will not come, but satisfy the condition for the same purpose you are getting. Because section 11.5 investment, earlier investment, you are now using for the corpus. So like that, you must identify the sources where from you are making the money or raising the source and then apply. So this is how you have to prepare the recession payment account to compute the income. This is the basis. Then only you can correctly certify. So the audit objective. What is the audit objective? To prepare the audit report means complying the section, positive sections, positive conditions, whether they have complied or not, you have to see. Negative conditions, they have not touched. So negative conditions are not applicable to these institutions. Those conditions also you have to see. That means something done positively, something not done negatively, also you have to certify. So this is the purpose of this audit report. So how many conditions are there? Slowly we have been seeing, but one must be thorough with this because this is a complex thing. No, the government is determined to give the exemption only for the eligible direct purposes, and for others, it's not going to give any say benefit. Exemption is not going to be there. They want to collect the tax. So for that sake, one should be very careful in while conducting the audit itself, that nothing is the spirit of the act, the provisions of the act have to be complied. That's how. So 1023C, because of section 11, 12, 13 amendments, 1023 is also having 23 provisos, and some provisos have got explanations, 16 explanations. All these are all nothing but conditions. So either 1023C or section 12AB, one can have. Earlier both people used to have with the left hand one, right hand one. Now last year amendment was 2021 amendment was either you go for 11 1023C or you go for 12AB registration and section 11 exemption, not both. That's except agriculture income 10.1, except agriculture income 10.1, like that. So similarly, I have already explained, adoption or modification of objects is not going to be smoothly taken over. Within 30 days itself, Modification means by passing a resolution, you want to take up a new object. The moment you pass a resolution, within 30 days, you must take the approval of the jurisdictional commissioner. Then only it will be allowed your section, almost a re-registration. If you don't apply within 30 days, your existing registration, you will lose. For that year, you cannot claim Section 11 exemption. So this is how the so the Section 11 exemption is going to be continued only when you adopt or modify your objects. You simultaneously apply for these things. So this is how you have to be very careful in complying these provisions. So I advise better take a pre-approval and then modify. So subject to the commissioner allowing only, you modify. For example, many of the trusts nowadays, 2 trusts will merge into 1. 1 trust will get demerged into 2. Say, for example, a big trust is having an engineering college and a degree college. So they may split into 2. A big trust is having 2 engineering colleges. Some trustees want to continue as 1 trust, other trustees want to opt for another trust. So which is the better way? What is the procedure? What are the conditions to be satisfied? So like this, it also amounts to adoption or modification of objects only. Splitting and merging also is not your job. So we are given exemption. If these assets you want to split or you want to merge, so you must take the prior permission. So like that, the exemptions are all there. So the difference between 1023C and 12A, I said that the capital asset transfer specific exemption is not there in 1023C. So these are all the small differences. We need not worry about these things. So the 12AB registration, the 2023 amendment is, you will lose your registration. I am going to the 6th in the slide, 6th point. If the application for registration is not complete, or it contains false, or it contains incorrect information, you please understand, you filed form 10A, you got registration, you are satisfied that you got it, okay, I'm continuing. But while examining in the scrutiny, he will go back to your 3 years back, 2 years back application. In that application, something is wrong. Inadvertently, you have given. False means intentionally. Inadvertently, you have given means incorrect. Or some columns you kept blank. That means not complete. That can be a cause for cancellation of your registration. This is the amendment this year. See how rigorous the amendments are. So the registration to continue, the basic things, you must apply only for your objects. For other than the objects, if you apply, they have given a definition in section 12AB, subsection 4, naming it as specified violation. In other words, violations are 3 types: serious violations, normal violations, very mild violations. For all serious violations, the name given is specified violation. So the specified violation is defined in section 12AB, section 4. This specified violation contains 6 items. Because of the specified violation, your registration is going to be cancelled and you will lose your section 11 total exemption. And once it is cancelled, your net assets are becoming taxable, not the income. Your net assets market value 30% is going to become the taxable income. Within 15 days after cancellation, you must pay that 30%. Section 115 TD. You see, because of this rigorous only, as I told you 3 days back, the circular said, though 1 year lapsed, we are not going to apply 115 TD. The circular said in writing 3 days back. At least now you comply the law. At least now you correct your mistakes, fall in line, get the exemption. Otherwise, 115 TD is applicable negatively. You read the sentence in the circular 3 days back, even CBTV circular 6, dated 24/5/2023. What it says, 115 TD will not apply, at least now, if you fall in line. So the columns filling up, in the application, either 10A or 10AB applications, you have to check up. If it is incomplete, they would have given the registration. Now only they will verify. During the assessment, they may verify. In fact, I have forgotten to tell you, the books of accounts prescribed rule 17AA has at the end said, all these books and records shall be preserved for 10 years. The period for which the books of accounts prescribed are to be kept and maintained for 10 years. So your records, if they find some deficiency, it should not become a specified violation. If it is a specified violation, very serious. So now we'll go to the meanings of specified violation, because these are all there in the audit report questions. Have they applied for objects only? Positively, they gave in the audit report. You should say yes. In the column, they said yes, no. Say only 2. You have to tick either this or that. So be careful in filling up the audit report. So they applied only for objects. If there is a business which is incidental, whether a separate set of books of accounts are maintained or not, have they applied their income for private religious purpose? So private religious purpose or for any specific community caste, if you apply your income, then, so what do you mean by specific community caste? For example, there is a decided case, which I have given one of my slides already. Say, for example, a Muslim name college is there. The assessing officer said, you have applied your income only for a particular religious. So then you are saying education. Education should be religious. You applied for your religious, I am not giving. Then the institution said, out of my total students, only 4 to 5% students are Muslims, all others are Hindus, all other castes. So where is the question of I applying? Majority I have. I will give you another example. In Kerala, there is a particular church. The church income, 75 to 80% income is shop rents. Only 20-25% is from religious activities. Its application side, 80% is to maintain the church. The assessing officer said, yours is a religious one, you are saying, but your income side is 75 to 80% is the rents from shopping complex shops. So yours is a commercial activity. So you are not eligible for Section 40. So yours is a trade, commerce, commercial service activity. So ultimately, the institution has fought and said, not from the receipts, from the payment side only, its object has to be determined. So the payment is 80% to maintain the church. So it is a religious institution only, because people who are coming are not offering much money. We are bound to exploit the properties lying with the church. So we got the rents. So that doesn't mean that we are doing business by ourselves, and we should not go to that extent. So the interpretational issues will come. So one should be very careful in complying the law, understanding it thoroughly. The other fourth class say, any activity is not genuine. So I am an honest person, I make the statement. If I have to prove that honesty, any chartered accountant now who is listening to me may ask, how do you say that you are honest? To prove it very, very difficult, because negative things are visible rather than positive. For example, darkness, can you define? Brightness you can see visible. Darkness you cannot define. Absence of brightness is darkness. So if I say I am sincere, honest, prove it means it is very difficult. My dishonesty somebody can prove. My honesty I myself to prove it. So the question here, 12AB says, specified violation. Is there any activity which is not genuine? The auditor has to certify this. There are no specified violations. So it is eligible for exemption. So genuineness, the auditor has to certify means. So it's a regular activities. Genuine means definitely, for example, education institution. It sold its education because some 7 months back in Hyderabad city, one big minister's education institutions are being searched. They found a lot of selling of seats. The education institution seats are being sold. In fact, in the sense, the capitation fees is received. So the activity, is it genuine? Is it education, not profit motive? For all these public charitable institutions, religious institutions, profit motive is not profit motive. NPOs, these are all first of all, and then becoming public NPOs exemption. So if the NPO is not there and profit motive only is there, means it is not genuine. The activity is not genuine. Your main objective is not genuine. So the auditor has to certify and say, yes, sir, there is no specified violation, exemption is there. So similarly, the fifth one has not complied with any other law. For example, during the COVID, every state government has prescribed for a particular CT scan of the lungs, because COVID is affecting the lungs first of all. So in the lungs, there is no blockage. Only by CT scan, one can say what is the percentage of block. So they prescribe 2,500 rupees, don't charge anything more. Throughout the country, several state governments raided, conducted surveys in the hospitals. They found the actual receipts more than 2,500 rupees. So here the explanation for this is, if a state government has prescribed something, that law, if you have violated towards your main objective, then also it is a special violation. Your registration can be cancelled. So if it is a first registration, in the past, is there any violation? Or if it is a continuing exemption, and during the assessment stage, the assessing officer has found they paid some fine to the government, and that fine is towards violation of the government's other law. So not only the Income Tax Act, the other law is also. Here I should draw your attention to the new Noble Educational Society. In the Supreme Court, what it has said, though luckily, fortunately, prospectively, my judgment is applicable. Supreme Court itself said prospectively it is applicable, not retrospectively. What is that? If the state government has prescribed charitable institutions to be registered under the Charitable and Endowments Act, registration of that law is also a must. So luckily in 2021 and 22 March, June, majority education institutions have got 12A registration, re-registration or renewal of the old one and got it. But next time when it comes to you in 2026, you are going to apply for renewal. This Supreme Court decision is binding. All such education institutions, all such things where charitable purpose, just like Bombay Public Trust Act, unless you first register your charitable institution, whether education or relief to poor, medical relief, unless you register first with the state charitable endowments act, your section 12AB renewal or registration will not be done. It is applicable prospectively, the Supreme Court said. So the complying the other law is becoming mandate. So though this provision has come in 2019 October on the statute, but its the effect, one effect we have seen only in 2022 October Supreme Court decision. So these are all the specified violation, very serious thing, which one has to comply. So I have given this definition more time and say the importance I have explained. And then the restrictions 11.6, as I told you, from 15-16 assessment year, the depreciation, 40A3 and 40A from 1920 assessment year. Actually, what is this 40A? More than 10,000 rupees, you should not apply by way of cash. You should pay only by way of electronic mode or bank mode. So this 40 capital A3, all the expenditure, revenue expenditure capital shall be as per 40A. By mistake, we have not done it. By cash, we have done it, let us say. Then it becomes taxable income. No question of it being less than 15%. Some other exemption you cannot claim. You have to compare. Similarly, TDS and TCS liable. So the expenditure you have incurred, if it is liable for TDS, TCS, you have to comply these things. So if you don't do that, then also that application, that expenditure, whether revenue or capital, is not to be taken as applied. Directly, it will become taxable income. So any other law I have already explained you, yes, no. So then the general exemption I have already explained you, whether education or medical, if only 2 items instead of 1 crore, they have become 5 crores from assessment year 22-23. So for these charitable institutions, here the aggregate receipts 5 crores. In one particular case, they said aggregate receipts means main object receipts only, not the interest and donations. Sometimes your savings in the bank FD you may get by way of interest, some small donations you may get, they are not to be included. That case also I have given as a citation. So then the question of corpus fund donations, as I have explained you, the amendment is for all corpus fund donations, you should maintain a separate, specified, identified register, and then the source of this, how you are going to use it, you have to say. And similarly, the loans received also you should maintain. So the exemption under section 11(1)(d) is for specified donations. So if you maintain separately and identify them and keep them in the section 11(5) mode only, you are going to get it. By chance you are not able to keep in 11(5) mode and use them for your objects, it is neither income nor application. But in the year you replenish this corpus fund donations again by way of representing 11(5) mode deposits or investments, then it's eligible within 5 years only. So similarly section 11(1) explanation. So this also as just now as I have explained you, whether the loans or say these corpus fund donations, the 5 years limit to set right the initial year deficiency, you can make good within 5 years, then automatically to be there. The recent amendment is earlier years, whether by way of eligible depreciation is not an expenditure, is an allowance, excess you got, or by expenditure you got excess, then earlier decisions were there, it has been set aside, and so no question of any allowing the carry forward of that is the amendment's effect. So similarly, whenever you are filing form 10, number of decisions, normally people, only chartered accountants used to advise the people, pass the resolution for your main object education, I will use the money. No, object is not to be there, purpose should be there. By bringing broad objects as in form 10, if you do, you are going to have the risk. The number of court decisions said it is not the way. You should specify the purpose. As I told you, you are going to buy the CT scan. You say for CT scan purpose. So in case CT scan is not available, then under section 11(3), you can ask the assessing officer to permit change the purpose also. You go for another object. For example, a hospital wants to have a blood bank. So you wrote the purpose, I am accumulating the money for a blood bank, I need 3 crores, 5 crores. So for a blood bank, I am accumulating the money. Blood bank is a purpose. Blood bank is not possible. Or say government banned the private blood banks, let us say, in the 3rd year, 4th year. Then you go for a CT scan machine or some other medical equipment or say buildings or land. So then change the purpose with the prior permission of the assessing officer. For that, section 11(3), 11(3)(a) are their provisions for you to apply and change the purpose. So purpose is more important. Don't just like that repeat the objects only. 1 or 2 objects let us write and then file form 10. By filing it is all right, but subsequently it invites a lot of difficulty. So the exemption may not be available if it is taken up for scrutiny. So similarly, application of income, I have told you on cash basis only from assessment year 23-24. So the accrual basis is not there. But actually, I have given one, say, last in this slide, if you see, 31st date check you have given, which is encashed in April, May, June, because 3 months validity is there. Then also check date is important. On the date of check, on the date of payment, the check given date is treated as paid. This is the datation, the old datation. So better you do that. Otherwise, say on payment basis only the expenses are being allowed. Accrued expenses are not being allowed as application. So it applies to both revenue and capital expenditure. But earlier you are having mercantile system. Can you now change to cash system? Yes, for this also Gujarat High Court decision I have given. So the CAT versus charges, where they said, yes, one can change from mercantile system to cash system because the law is changed now for both sides. income and expenditure. But depending upon the trust or institutions of financial position, only advise to change. Don't change forever. For example, you are having majority income bank interest accrued. Bank deducts TDS on accrued basis. Banks give you the interest on accrued basis. If due, first income accrues, arises, and then due, and then payment. 4 stages are there for the actual payment. So the banks, if they are giving the 26 years uploading the TDS and then on accrual basis, and your major income is on accrual basis, go for accrual system only. So if it is a cash basis, actually, for example, the government is reimbursing the colleges the fees, but in the same year it is not reimbursing. Your expenditure is in 1 year, and your income is in related to the expenditure. Your income is going to be in the subsequent year. First, you are incurring the expenditure. So in that case, go by the cash system only. So because you are incurring the expenditure after the receipt of the government funds, if you are going to incurring the expenditure, go by the cash system. Or you are borrowing and then applying, then better go by the say cash system. So which system, mercantile system or cash system, which is suitable to a particular institution, depending upon their actual financial transactions. We cannot prescribe for everyone the cash system, for everyone the mercantile system. So to avoid the difficulty only, you can change from one system to other system depending upon the situation. So this is how, for example, in the last March month only you received some donations, or say you collected the fees. For example, education institution. For the coming academic year, you collected. If you are following the cash system, definitely what you have collected is your income. So what you have collected is your income. Then file form 9A. What is the 9A? I received the income, but I could not incur the expenditure 85% because it has come in the last year. So in the immediately following year, next year, I will incur the expenditure. So from the next year actual expenditure, the form 9A expenditure will be deducted. Remaining only will be considered as the next year expenditure. So the shortage is there because of this cash system. So then you file form 9A, which is very simple. Unlike form 10, where specific purpose and then represented by section 11.5 mode investment that you can avoid. So this is how I advise you. Then conditional grants, whether they are income, whether they are to be received. Actually, your 10 BD, the donations thing, what it say, even in-kind donations, you must report in 10 BD. 10 BD purpose is the donor should claim that ATC deduction in his return automatically, means the donee receiver should upload his PAN number, the donor's PAN number, amount. Then automatically the donor will get the eligibility for deduction by ATG in his computation of income. That is the purpose. But Form 10BD prescribes that even the donations in kind have to be mentioned. So the question of now conditional grants. What do you mean by conditional grants? For example, now 2% of their average preceding 3 years income shall be applied for corporate social responsibility. There is a Schedule 7 and Section 135 in the Companies Act, which says your profits 2% must be applied for corporate social. Through this 12AB registered or 1020C approved institutions only, you should spend the money. You cannot directly use it for a public purpose and say, yes, I have served the public. You must through these trusts or institutions only. Similarly, Foreign Contribution Regulation Act grants. Foreigners, foreign country, foreign institutions or foreign persons may give donations to these institutions. So then they may impose the condition. For the coming 3 years, you construct in 3 districts the public toilets. The foreign contribution, foreign grant has come. You cannot in 1 year itself construct all the public toilets. So you have to keep the money. Now, is it the current year income? So on receipt basis, they are current year income for computation purpose, but for accounting purpose, it is a liability. They will appear in the balance sheet. For example, the CSR fund, the money, the condition, the company itself, donor company itself says, my money, you don't mix with your money. My money for the specific purpose only. I give you, you have got 4 objects, but for your particular object I have given. For the particular object only, you apply the money. Utilization certificate to the extent. So the money shall be kept in the balance sheet liability side and represented by the asset on the asset side in the bank balance. To the extent you apply in 1 year, to that extent only the liability will become income, and what you have applied is a application expenditure. So accounting treatment is different and the computation of income is different. That's how, to drive home that point only, I have given these case laws and this.
Phalgun sir?
Yes, sir.
Sir, this is Ayush Diwan. Apologies to interrupt you. Sir, can we complete the deliberation from your side in next 10 to 15 minutes if that works for you, and take up questions post that, sir?
Yes, please. Yes, please. Now 5:45. In another 5 minutes, I will complete, and 10-15 minutes for question answer.
Sure. Thank you, sir. Yes.
Okay.
Sir.
Okay. So I have got 40 slides, but now we are in the 20th slide. So the remaining slides I will quickly cover in 5 to 10 minutes, and then we will go for question answer, please. Okay. So the Supreme Court 2 decisions, landmark decisions, which have shaken these exemptions. That is the first one, the New Noble Education Society. I have already told you. So earlier number of decisions said even some 10 chartered accountants form a society to give only scholarship to the CA course pursuing students. Then also it is education, earlier decisions. But now no, your scholarship giving is not a scholastic education as per this decision. So like that, the definition of solely existing for education has substantially changed. Please go through it. Secondly, not for profit motive. So if at all you are getting earlier 20%, 30% education institutions used to get net profit. So that if it is the case, they are not eligible for exemption. The interpretation of the Supreme Court decision. So one should be careful. Always keep a very small margin. Don't keep high margin. So already I told you, State Endowment Department registration is also must. So this is about this decision. So I'm going to the second decision. That is the known as AUDA. That is Ahmedabad Urban. Actually, the heading is Ahmedabad Urban. 109 institutions are covered in this judgment. In this 109, CA Institute is also one such institution covered. So why they said CA Institute is not a public charitable institution? The department should. It has taken the matter. Delhi High Court affirmed it positively. The department taken to Supreme Court. So like that, there are 46 urban development for which the exemption is denied, registration is denied, and exemption is denied. So one such institution is Urban Development Authority, is Ahmedabad. So the Supreme Court said it is public institution. CA Institute is public institution. Urban Development Authorities which are promoted by the government or because every state government, right from Road Transport Corporation (RTC) to Seeds Development Corporation, Seed Certifying Agency, or say standards laying institutions, or say, for example, every state government is having textbooks printing corporation. For high school students, they want to give free textbooks printing corporation. So like the number of corporations are floated by the state governments, and some institutions are having commercial activity of selling with light margin. Government is also not for example, a public distribution system, food grains, it procures and sells. So there it is subsidizing food grains. But some activities for profit, with some profit element they are doing, are they coming under general public utility? Are they eligible for registration? Are they entitled to these things? For example, educational institution, if it is maintaining a hostel, it is a public institution only. So eligible for charitable purpose and eligible for exemption. So like this, the judgment has given a very thin margin. They said the margins will be markup should be a nominal markup against the cost. What is cost they have not defined, but they said with a nominal markup, nominal cost markup, if you are going to collect the fees, cess, or any other money, then also it is charitable purpose. Because the section 215 charitable purpose provisos are saying if your gross receipts exceed in the nature of this fees, trade, commerce, or business, the money collected by way of fees or cess or by other name is more than 20%. It is no longer a charitable purpose definition. Its interpretation the Supreme Court has done in this way. So one should be very, very careful. Supreme Court itself has given the examples like In Gujarat, Sabarmati, you are having Gandhi Peace Foundation. They are having a museum of Gandhiji and collecting entrance fees for the museum. Is it for commercial purpose? No, because what they collect is only for the maintenance. It is not for profit motive. It is public charitable institution. Similarly, a number of, so for example, majority throughout the country, community-wise marriage halls are there. If the fees or say if the rent collected for the marriage hall is only to meet their day-to-day expenses, very, very thin margin, then it is public charitable purpose. If the rent collected is almost at par with the competing other marriage halls of commercial nature, like convention center, all these things, then it is no longer. So this is a very, say for example, blood banks. Blood bank has to collect some money because the blood has to be maintained, so in a reusable way. So is it a commercial activity? Because if they are collecting the money, they are selling the blood only. Some people will say no, because they are collecting only the cost. It is public charitable. So like this, the Supreme Court has given these classifications, examples. One should be very careful what is meant by business, and if it is incidental to main activity, what are the conditions to be satisfied? I have already explained, including the tax audit report. In addition to the trust audit report, the tax audit report also has to be filed, and then there should not be any disallowance as per the tax audit report. So this is the more important thing. Related parties, trustees, they do their voluntary service, they take salary. Unless such salary is reasonable, the auditor says that salary or remuneration is reasonable, then the violation of section 13(1)(c) will be there. So once section 13(1)(c) violation is there, for that violated portion, it becomes a taxable income under section 115 BBA, a newly specified income. Earlier you have seen specified violation, now specified income section 115 BBI is introduced, and the penalty is also introduced. The penalty is also going to be there. So of course, for this specific item 271 AA is not there, but unreasonable amount what they get, the first time violation 100%, repeated violation, the benefits passed on to it, but the 200% penalty is also there. Only for educational and medical relief people, if the trustees' children get free education or say subsidized education, that penalty will not be there, 115 BBI will be there. So like this, there is a thin difference in complying the law. So how it is going to be there, one should see. So then impermissible investment, there is 11.5 mode. If you are not there, please convert it. Otherwise, say whatever you have invested in impermissible mode will become taxable income. So the I gave you the other than donation, if you receive in other than 11.5 mode, how to deal with all these things. I have given some case laws also I am giving. So the specified violation already I have referred in my earlier slide. So consequence of that specified violation have become more severe here. You will lose section 56 to 10 recognition also. So this is the difficulty. And then the computation of income. There is one section newly introduced, section 1310. So the section 1310 says for mild ordinary violations, instead of cancelling the registration, your income will be computed as per the specific mode. What is the specific mode? Purely revenue income and revenue minus revenue expenditure without even depreciation. So you have to arrive the taxable income and pay the tax. So for small violations, this is section 1310. Violations are mentioned in section 13.8. So this is this. For example, during this year, you are having general public utility objective and more than 20% crossed. So year to year, you should calculate whether it is a charitable purpose or not. Every year you should see. If you are below 20%, your gross receipts out of the total receipts for commercial purpose, you are still charitable purpose. If they exceed more than 20%, you are no longer a charitable purpose. So year to year, if you are no longer a charitable purpose, your income will be computed like this only. This is section 1310, a specific way of computing the income. So if the cancellation notice are there in the earlier up to 21-22 provisions based number of decisions are there. In 3-4 slides I have mentioned them. So how to defend yourself if you receive a notice, how to defend yourself that I have not violated. It's only a very mild violation, or say if it is a procedural violation like that, how to argue, how to So the specified income 115 BBA, as I mentioned, you have not able to file Form 10. Only 80% you have applied. So the remaining 5% will become taxable, and it is taxable at 30%. So and the conditions, though you filed Form 10, subsequently you are not satisfied with the condition, then it becomes specified income. So then 30% you have to pay. So these are all the examples. So now I have come to finally the audit report. The audit report, 49 clauses. First 10 clauses are name, PAN number, your unique ID, registration number, assessment year, your objects, like that. The first 10 clauses will be there. And then the 11th class starts with objects class. So which object's sake you are having code numbers are given in the notes on this audit report. So that code number wise you should do the objectives, and then modification or adoption of the objects, has it taken place during the year? The auditor has to say yes, no. If yes, the date when it is modified, how it is modified, all these things will be there. So like this, if you are having provisional registration, those details, whether books of accounts maintained, the 14th class, I have dealt with it in the beginning, that code numbers are given for those records. So some 7 code numbers are there. Those 7 code numbers, notes on accounts to this audit report mentions those code numbers. With those code numbers only, because this is a highly computerized form, this audit report, you will not get much explanation in the clauses. Only it refers to section and the code. So you should comply with those things, thoroughly understanding. So is there a general public utility object? If it is there, what are the receipts? Gross receipts, how much business? What is the expenditure for that? TDS related, is there income? So if your income is subject to TDS also, you should give specifically. Your expenditure is also subject to TDS. That again, another column will be there. So like this, donations, thorough analysis is given. So the donations, gross total donations, out of that, how much you have uploaded 10 BD? Because if the donor is not giving the PAN number, or say the driving license, or the passport, or his Aadhaar number, you cannot upload them in the form 10 BD. So what are those receipts? So the donations analysis has to be given. So similarly, FCRA receipts and payments analysis has to be given. Income from property, that also you have to give. So income applied outside India, if it is there, you should give. This is a 31 clause, the application of income. So here it is the heart of this audit report is the 31 clause. Here, what is the allowable expenditure? 8 clauses are there. You should give positively the figures, both in cash, how much expenditure incurred, through bank money. 13 clauses are specifically asking you, the auditor, have you violated this? Have you violated this? Like that, 13 disallowable clauses are given. 13 plus 8, 21 clauses are 21 sub-clauses are there for this 31 clause. 21 sub-clauses are there for this 31 clause in the audit report. Allowable specific items, not allowable, disallowable 13 items. Item by item, the auditor has to say true and correct this certification. This is the heart of this audit report. Similar is there in this 10 BB also. So one should be very careful. So 30 is income to be applied in India. 31 is income actually applied, complying the conditions. Then 32 is nothing but 30 minus 31. What is taxable income? So compute the income. The taxable income you are going to certify through this audit report, which is not there in the tax audit report. Be careful. So the audit report's importance, how much responsibility has been fixed on the auditor, one must be. So apart from this normal income, 115 BBA income, how much is there? Anonymous donations, how much income is there? Anonymous donations, taxability is out of the total donations. If the anonymous donations are 5% or less, nothing is taxable. If the anonymous donations are more than 5%, then the excess is taxable, on which 30% has to be paid. So like this, the extra points in this audit report is more than 2 lakhs rupees have you received as donation by cash or any other sale of assets have you received. So like this, the cash transactions limits also 269 SSST limits are also being asked for here. So is there any specified violation? What is that income? So like this, who are the specified persons? What are the transactions with them? So like this, is there any taxable income under section 1310? I told you so earlier. So like this, one more thing you see, for any specific person, through him, have you incurred 50 lakhs or more expenditure? So it is nothing to do with exemption, nothing to do with section 11. Nowhere else 11, 12, 30, 50 lakhs limit is there. But the audit report is asking, through a single person, have you incurred more than 50 lakhs expenditure? Whether capital expenditure, give the details. So for TDA's sake, for continuation linking sake, they are asking full details. On 10B, the new points already I have explained, but I given in this slide as a gist. What are, in addition to normal thing, what are these things? And so the taxable income, the 7 types of taxable income one can arrive. There may be a possibility for the same institution, all the 7 types of taxable income may come, not one type. So each one, how you have to calculate separately and then arrive at income, you have to see. So the penalties are also there. For example, 10BD, why they have extended from this month, May to next month? Because you are inviting a penalty. There is a separate section penalty, 271K, minimum 10,000, maximum 1 lakh. If you are not well, 10BD, once you file, even corrections you can make. So these are all the possibilities given. So one should be very careful. As I told you, if the benefit to related parties there, first year, first time, 100% penalty. Second year, almost 200% of such benefit is penalty. So with this, I have completed. So I thank the organizers for giving me this opportunity to share a few of my thoughts. Now it is open for question and answer, please.
Thank you so much, Phagul sir, for delivering such an enriching and enlightening session with so many practical insights and examples. We'll take up a few questions. A lot of questions have been received from the participants, but in the interest of time, let us take few of them. So beginning with the first question from Mr. Murli sir, whether ledgers maintained for Annadanam expense would be sufficient compliance to be mentioned in the report, sir?
Yes, you Annadanam expenditure, provisions how much, salary how much, electricity how much, rent how much, like that. Normal ledgers you maintain with the vouchers and with the identity of the persons to whom you have incurred the expenditure. So that is more important. That is sufficient.
Got it, sir. Next question from Himang Singla. If the trust has advanced some money to a third party, will it be a violation of section 11, subsection 5?
No, towards incurring the capital expenditure. For example, you got a plan approval for building. So the contractor needs advance. You paid the advance, for example. Advance is also a capital expenditure. No problem. During the year, you have building completed is not the capital expenditure. Building advance are also capital. Similarly, vehicle purchase, you give advance. You wait for 3 months for a delivery. One financial year, you gave the advance only for the vehicle and subsequently you receive the vehicle. Then also it is a allowable expenditure. Advance are all allowable expenditure. Through bank you pay and keep the receipts and say proper resolution, proper evidence, everything genuine, you please. Through bank you give, because party capital A3 will apply even for advances because you are claiming it as expenditure. So that is the answer, please.
Got it, sir. Next question from Mr. Kishore. Can a religious trust which was formed in the past apply for registration now? And if yes, whether it can change the objects, sir?
Sir, religious trust already formed means objects cannot be changed now. Trust, once the trust law says, once the author of the trust created the trust, whether oral trust or written trust deed, objects cannot be changed without the permission of the court, number 1. Number 2, so the trust, your question says, objects cannot be changed. Can I apply for registration, your question? Even now better. Why? 148 capital A notices, thousands of notices are being given, even to these religious institutions, even to the schools, less than 1 crore gross receipts. They are saying, you are not filed the return. 139 says, whether it is a public religious institution, without registration also, its exemption is there. But return filing is not exempted. If you don't file the return 148A, once 148A comes, they apply 69 or 68 and then say, you have got a taxable income. So my advice, all the religious institutions, whether managed by the government endowments department, private people managing religious institutions, gross receipts per annum exceeding 2.5 lakhs must have registration, then only they are eligible for exemption. Apply for registration, immediately get the registration. That's my advice.
Got it, sir. Next question from Mr. Madhusudan Agarwal. Can we file Form 10B with the receipts and payment account copy and without the balance sheet?
Sir, the 10B is saying the attached income and balance sheet, when it's saying You say, I will file with rescission payment account. The audit report itself is saying that the attached balance sheet, when you attach only rescission payment account, it's not an audit report. They will not consider. You cannot upload. You cannot, it's not the way, you will not get any exemption. It's not at all going to be considered. Rescission payment is not an audit report. The prescribed 10B or 10B says income and expenditure and balance sheet with annexure. Annexure is this 49 classes or 32 classes. That is the answer.
Right, sir. Next question from Mr. Hari Agarwal, sir. In case of any modification in the deed other than the object clause, whether the approval of Commission of Income Tax is required?
Sir, this is a very practical question. Sir, trust deed drafting itself should have been in a better way. Only objects are specified. From time to time, the rules will be framed, just like our bylaws in a society. The memorandum of society is different, bylaws of the society. A limited company also, memorandum of association is different, articles of association different. Similarly, in the trust deed, two parts. First, the objects class, which is fixed. Whereas the day-to-day administration procedures, if you keep a leverage in the trust deed and accordingly, if you pass the resolution and then do the administration, no prior permission, no question of any subsequent permission also from the commissioner is necessary. But if the trust deed is not permitting you to do that administration changes also, then it is an amendment to the trust. Sir, trust deed drafting, even society objects class drafting, many people use the activities as objectives. Activities are a borrowing power is given. Borrowing power is not an object. In the objects class, the society can borrow, the trust can borrow, should not be there. Your object means the goals only. The loan is a means. So if the activities are going to be amended, if it is permitted in the trust deed originally, they can be amended from time to time. Then you need not take the permission of the trust deed amendment. It doesn't mean that you should go to the commissioner and take the permission. If it is touching the objects only, you have to take. This is my answer. Sir. Next question.
So the next question is, when only 85% is treated as an application, then what about the balance 15? Will it be exempt or it will be considered as a taxable amount?
Section 11, subsection 1, small a says, your gross income is exempt provided you apply 85% minimum. That means you applied 85, 86, 90, 92, then the remaining 8% is automatically exempt. That's what it says. So the remaining is automatically exempt provided you from the gross income is exempt, because sir, by convention we are our mindset is net income we are thinking. Here the charitable institutions, the public religious charitable institutions, gross income is taxable. First of all, 224 definition, gross income is taxable. How much is exempt means 85% or more if you apply, it is exempt. Remaining thing automatically is exempt. That's all. Sir.
Madhu sir, you wanted to say something?
Sir, for section 1046 trust, like 12A and ATG we apply on the online, but 1046 need to be applied to CBDT. Is there any procedure for applying online or what's the procedure for that?
Sir, 1046 now is substituted in 2020-23 with a new section 1046 capital A. You distinguish between 1046 and 1046A because the Ahmedabad Urban Development Authority 1046 it is affected. So either 1046 is mainly for state government or central government promoted institutions which are having a small portion of commercial activities. So then instead of 12A, 1046 they can apply. So under 1046, the specific exemption they can get. Now, those who are having some commercial activities, a new section 1046A is introduced. So the whether you choose 12A or 1046 is in between. As per the Supreme Court decision, if you can conceive, if you can expect that there will not be any trouble if you go for 12A, under 12A you go under general public utility, government promoted, not necessarily education, medical relief, general public utility, you go for 12A. 12A is a broad, 12AB registration from 2023 is a broader exemption compared to 1046 or 1046A, which is a limited head income. So depending upon these objects, depending upon the activities, depending upon the nature of income, you choose in between 12AB or 1046 or 1046A. These are the answers.
Okay, thank you, sir.
Sir, is there a time limit to set aside the 15% amount if it is not applied already in the current year?
No time limit. That
No time
15% automatically will be in section 11.5 mode. See, shortage of 85% only you should set aside.
Got it.
Now, so less than 15% means automatically it will be in this for your objects you are accumulating. So you can go for your objects application anytime. No time limit is there. The 10 years you accumulate 10%, 10%, 10%. In the 10th year you apply for your object. Until that time it will be in the 11.5 mode only. No problem.
Got it, sir. Sir, does donation received by unregistered trust, will it be taxable under the 56.2?
100%. 100%. 56.2.10. 56.2 subclass 10. It says yes. Donations received, any money received without consideration, it squarely falls other source head 56.2.10 income because the receiver is not having 12A registration. Yes, sir.
Got it, sir. So we'll take two last questions. Whether GST will be applicable on rent, from Kalyana Mandapams of the trust, sir?
100%. Sir, this charitable institutions income tax exemption is different. Though you have 12AB registration and you are claiming exemption in section 11, the rent from immovable property, your exempted institutions, for example, a college, for example, a state government promoted university, that university let out its auditorium for the another school, recognized school annual day. School is not having auditorium. It approaches the university, state government promoted university. It is having a big auditorium. Sir, one day, okay, give me 50,000 rupees. On that 50,000 rupees, the university shall pay the GST, collect the GST, 18%, pay the GST with due registration. So the GST is applicable to all the religious institutions, charitable institutions, religious institutions. For example, TTD like Tirumala Tirupati Devasthanam pays around 52 crores as a GST because it is collecting on all the room rents, GST, on all the Kalyana Mandapams, GST. So it has to collect and pay. So the under service tax regime itself, the matter went up to Supreme Court. Even then the Supreme Court said you have to pay service tax. Now it is replaced by GST. So for all public religion charitable GST is applicable. Yes, sir.
Sir, a religious society having 12A registration has filed the 10B form late, and the department has already issued a demand. Is there a remedy or anything can be done in this situation?
Yes, see the circulars. There are several circulars. Up to 365 days delay, the jurisdictional commissioner is having the power to condone the delay of that audit report. More than 365 days, the principal chief commissioner of exemptions, Delhi, alone is having the power. So they're all eligible for the condonation of delay. You give the reasonable cause, definitely the delay will be condoned in filing the audit report. You will get the exception. No problem. Meanwhile, first of all, what you have to do, you have not filed the 10B audit report, the CPC has raised his demand. Immediately file the audit report now and then file the condonation letter. So the next day you say to the CPC, please hold the demand. I have gone for a delay condonation. Once the delay is condoned, you have to reduce the demand under 154. So you intimate the CPC that you have already applied for condonation. Number of circulars are there. From 2018 onwards, 5 circulars have come for condonation of delay. You can go by these CBTD circulars, please.
Okay. So this last question. In the audit, when we are saying that the auditor is broadly giving a true and correct view, right?
Of the annexure.
Of the annexure.
So, true and fair view. The annexure, right. The clauses 49 clauses, true and correct.
Right. So it's becoming more like a certification. So, yes. So as you have covered most of it already, but some broad guideline which you can throw some light upon, sir, for the practicing professionals to keep in mind before doing such certifications?
So 100%, no question of broad. Each clause 100% must be correct. 100%. If a single clause you are wrongly certifying, ultimately your personal responsibility, disciplinary action by the CA Institute is there, and the institution will lose its section 11 exemption. You must comply 100%. That is the government expects. Sir, tax audit is, as I told you, is easier now. This audit report is 4 times difficult than the tax audit report, according to me. You are certifying the taxable income. How much responsibility is fixed? Government has fixed too much responsibility on the auditor. Please.
Understood. Got it, sir. Thank you so much for patiently answering all the questions, sir. Over to CA Ankur Tibrewal.
Good evening, everyone. It is my privilege to have been asked to propose a vote of thanks in this webinar. I, on behalf of the Agarwal Chartered Accountant Society.
Sorry, Ankur, sorry for disturbing. Devdas sir wants to say something. I would request you to please.
Lavanya Devadas wants to say.
Yeah.
Please, ma.
So
Please tell
let's
me, ma.
first allow him to speak a few words. You can then give your vote of thanks. Sir,
I'm
please
sorry.
go ahead, sir.
I have in a Shatabdi Express speed, I have covered in 2 hours the very voluminous subject. So I must say my apologies for covering the subject because whatever is important only I have covered, but in the 2 hours I covered with too much speed. So how many could follow, how many could not follow, my apologies for that. Then you please continue. Conclude, please. Ma, Lavanya Devadas, please.
I just wanted to share some of my thoughts on the subject, but I would also equally state that it was an excellent exposition on the provisions of charitable trust. Mr. Phalgun Kumar, you must circulate this entire whatever you have stated to all the delegates so that they can use it. Now, the amendments that have been made is one of the most rigorous amendments with so many compliances. I feel it will be better not to undertake any audit of charitable trust having regard to the professional income involved also, because the responsibilities now are very numerous. Everywhere I'm stuck. Everywhere they say, for one simple reason, Mr. Phalgun Kumar was saying something, if in that form I don't leave it blank, it would also amount to not being complete and the registration can be cancelled. How is this possible? If I have not filled up any column, it's a mistake apparent from record. It's a defect which can be cured. I don't think one can just say that the entire provisions relating to charitable trust, the exemption will be lost. One aspect that you said was about 48(3) disallowance. If 48(3) disallowance is made, my income goes up. If my income goes up, why should I not say it is part of the income and apply for accumulation of income to the extent of 48(3) disallowance? This I'm saying without fear of contradiction, gentlemen, because the whole issue relating to these disallowances, you're aware when it came under 80 HSC and other provisions, we said our 80 IA benefits, we said whatever is disallowed will form part of the total income and I'm eligible for the deduction. This is another aspect which has to be seen. One other thought process which was passing in my mind was, well, from 1/6/2015, you're all aware depreciation was disallowed. So I had accumulated depreciation of past years because in the prior to 1/6/2015, you are allowed to claim depreciation and you are allowed also to take it as application of income by virtue of various Supreme Court decisions. If I've got accumulated depreciation on that date, now the law says from 1/6/2015, I will not be eligible for depreciation. Only for the current depreciation, I will be allowed. What happens to this unabsorbed depreciation? Can I not, because it is a substantive right which has occurred to me, I'm entitled to set it off. And the department is not going to allow it, but let me tell you that the entire unabsorbed depreciation would definitely qualify for entire deduction. Now, the thinking of the subject is education. Of late, the Supreme Court has also intervened to say any surplus income earned would the charitable trust would lose its exemption. Now, as long as the surplus feeds the objects, why should it be treated as the surplus cannot be done? Why should I not accumulate the surplus and use it for the purposes? No, but the thinking of the courts on the subject is that all these surpluses income, once you make, you're not eligible for exemption. This is another aspect which I thought I should explain and get the whole thing done. Now, this object of this special purpose for which you are filing the income and expenditure account, you were saying, something which is not in the statutory section, you said it was in the tax audit report. Any specific person you have incurred any expenditure above 50 lakhs through a specified person. Now, what is not stated in the statute? Can a form suggest? A form cannot override the section. So therefore, to that extent, I think the form becomes redundant and I would be entitled to say, since there is no such provision in the main section, this is without prejudice to my submission what the issue is. Suppose I say that, because forms cannot override the main statutory provisions of a section. So likewise, I was also saying about the various clauses to be saying true and correct. How can a chartered accountant say that it is true and correct? Can I give a disclaimer? This is subject to whatever is stated in accordance with the provisions. You write a covering letter if the form does not upload it on the basis of the information given to me. How can I certify that it is true and correct? And suppose there is something missing in that, I am signing the report and I would be hauled up. So therefore, these are some of the thoughts that was passing in my mind when Mr. Phalgun Kumar so very ably introduced the subject. Now, can I file an updated return for a charitable trust? If so, on what conditions? Now, suppose I have missed the bus in some provisions. What is the provisions? Can I file an updated return if I file the original return of income in time? Now, there are 3 dates of compliances given according to this. 31st August 2023, I should file 9 or 10. Then by the audit report, I should file by 39/2023. And then by my return of income on 31/10/2023. Various compliances dates. Why not you have a uniform date is another suggestion of mine. But anyway, these are all the points with the powers to be that is to be taken. But let me tell you, this charitable trust provisions is becoming a self-contained code. No chartered accountant in his best efforts and wisdom can say that he has passed through all the rigors of the provisions. Take the 23 clauses. You're bound to get somewhere stuck. The assessing officer, for some reason or the other, may say you have violated this section, that section, because nobody cares what the assessing officer does, because it is his prerogative. Once that is done, it becomes a round of litigation. I foresee a lot of litigation as far as charitable trusts. In short, I'm sure it will keep me busy throughout the year. Thank you, ladies and gentlemen, for giving me an opportunity to share some of my thoughts. Thank you.
Thank you, sir. Good evening once again. It's my privilege to have been asked to propose a vote of thanks in this webinar. I, on behalf of Chartered Accountants Society, extend a hearty vote of thanks to our esteemed speaker, Dr. CA Phalgun Kumar, sir, for sharing his knowledge and insights for the benefit of our participants. We would like to present a small token of gratitude to our today's speaker, Dr. CA Phalgun Kumar, sir. This webinar was very informative and we thank you for your time and efforts for us. Finally, I would like to thank all the attendees for wide participation and making this webinar a success. We hope that such support continues even in the future. Thank you, and have a happy weekend.
Thank you, Vikas, sir, for joining the session. It was a pleasure to hear you on this topic as well, sir. Thank you.